the first thing that strikes me is that, you know, this the timelines that this curve has have become very unrealistic, right? I mean, Speedy Gonzalez doesn't do it that quickly,
Yeah,
right?
yeah, it's
That just
very
doesn't
optimistic.
happen, right?
Hey, welcome back to another episode of the Deals podcast with Lucho Saenz and Paola Rojas. Today I remember to say our names, which is always useful. Hi, Lucho. How are you?
Good, Paola, how are you?
I'm good. So today we're gonna do something a bit different. We decided to look into the Lassonde curve, and we're gonna kind of place a few deals and projects or companies in where they are in the curve, and we're gonna give some insights into that. So, do you wanna explain briefly what the curve is, and then I'll talk about the different stages?
Yeah, sure. Thanks, Paola. I mean, yeah, we decided to sort of change track. We've been talking about a number of larger things, and last thing we want to do is forget the, where these things typically start, right? I mean, the junior miners are really the breeding ground, if you will, for mining projects, the ones that we see developed, and there was a very well known uh, curve, if you will, called the Lassonde curve, that basically talked about the life cycle of a mine or the mining project, and it goes through the different periods of, from early stage to construction, to development, through development and construction, until depletion, until the end of the mine life. But also talks about the different valuations and where investors go in and the types of investors. And there's, it's a good, it's a mining 101 kind of thing. And I, we thought it was a good idea to sort of start off with that. So yeah, I mean, why don't you want to talk a little bit about the stages and the timelines briefly, and then we can hit it off?
Sure. So very briefly, and we're going to be putting a chart so that you can see visually this curve as well. But you're talking, and these are going to be the periods or the time frames are going to be indicative because nothing's set in stone, but they are a very good approximation. So the first 4 to 5 years, we're thinking, or the curve is thinking concept pre-discovery. So this is the beginning of the road. The companies are, starting to explore in their deposits. They're just getting started. So the valuations at this during this phase are typically low, and everyone is kind of chasing these high and trying to grow. Then you have a period where between a couple of years, or sometimes a little bit more, there's increasingly good results. So you're going to be seeing more better news and better intercepts, and that brings a period of speculation. So you see a lot more people, a lot more eyeballs on the stock. Sort of kind of the peak in this curve is going to show you what we call discovery, the discovery times. A discovery is going to be a location where there is a mineral deposit, and we can get into what a mineral deposit is in a separate time, but that's basically what a discovery is going to mean. And there's no reserves yet, because that's another further step. What happens after that time, that is kind of the high, this what they refer to as an orphan period, and that's during the time when the company is going through a feasibility study of the different types and varieties that you have. And at that point, the stock starts to fall in terms of prices. The interest is not as high. A lot of the speculators have left the stock because they know that the next high is years away. So, a lot of people exit. So that's where you see a lot of companies during the feasibility and the development phase, and in that sort of bridge in between, to go for a long time with not a lot of volume or not a lot of movement in the stock price. And that's another moment where eventually you're moving closer to an actual startup of the mine. And at that time, you're going to see a lot more institutional investors, bigger institutions, bigger corporates coming in and either partnering or investing in the stock and helping the development sometimes via debt, sometimes via equity. And you're going to see another rise in the stock. And that brings us to the next final stage, when you're going to see another decline, and that's when the mine is going to be depleted. So that's basically what we see in the curve. So now, Lucho, we wanted to do a bit of a placing, some different stories to give another insight into this. Do you want to get started?
Yeah. So, I mean, the first thing that strikes me is that, you know, this the timelines that this curve has have become very unrealistic, right? I mean, it talks about concept pre-discovery, 4 to 5 years, as you mentioned. Then you're going for discovery, which includes drilling, um, 1 to 2 years. Then feasibility, after discovery, you've got feasibility, 2 to 3 years, and that includes engineering, optimization, capex, reserve calculation, some more drilling and stuff like that. Uh, and then followed by 2 years of development, which includes financing, engineering, permitting, and construction. I mean, Speedy Gonzalez doesn't do it that quickly,
Yeah,
right?
yeah, it's
That just
very optimistic.
doesn't happen, right? I mean, that discovery phase of 2 to 3 years, sorry, 1 to 2 years on this curve, that includes global resource definition, infill drilling, and step out drilling. It's going to take you at least 1 year to get the permits for drilling these days.
Mm. Yeah.
Not to mention the drilling itself, and getting the results and doing, proper campaigns. And the feasibility, 2 to 3 years, engineering, cost estimates, optimization, operating costs, capex, reserve calculation. That engineering, I mean, between a scoping study, pre-feas, and feasibility study, and depending obviously on the size and complexity of the project, I mean, you're talking easily 3 to 5 years, not the 2 to 3 years that they're mentioning. And then
Yeah.
it got 2 years for development. I mean, that's today. It's going to take you 12 to 24 months to build it. Okay. Before that, you've got to have the permitting. I mean, the environmental study, the impact studies, all of the permitting and the financing in place. And these things take time. So, I mean, the original curve, or the different variations of the curve, have you from, concept, or, early stage, what we call early stage, until startup, 11 to 13 years. The reality is that that's now 15 to 20 years. Okay. Main point is, any investor that gets into this cycle, or into mining, looks at the original Lassonde curve or the updated Lassonde curve and looks at, 10 to 11 to 13 years, which I'm now saying is 15 to 20 years. I mean, how many people have that horizon of 10 to 13 years? I certainly don't. Okay.
Well, not many. Not many.
So I mean, and of course, I mean, we know that there's different types of investors, and investors for every stage, right? I mean, there are very few investors that come in at the very early stage and are still there at the time of startup. There's different money pools, stuff like that. We take that into consideration, but the fact is that investors that wanted to get in, post discovery, if you will, where the project has been de-risked from the resource side, okay, and want to play that wave between discovery and feasibility, where the project actually becomes economic, okay. and then further if they want into the financing bit and catch that wave, it's no longer a 3 to 4 year wave. That's a six
Yeah.
to 8 year wave.
Yeah.
So people need to be very patient. Okay, and when in today's fast pace, I mean, the pace of the world is much faster than it was before, than it ever was. Okay, so patience is not actually a virtue that you find around very much. Okay, um, and the advances in technology, the fast-paced world has actually been gone the other way in the mining world, if you will. Permitting takes longer, financing takes longer, building takes longer. There are different kinds of risks, escalation of costs, and just political risks, right? I mean, if you're starting to talk, I mean, a typical uh, government lasts 4 to 6 years. I mean, that's the electoral period, right?
Mhm.
So, I mean, you could potentially see on a decent sized project, you could see three different governments go through from early stage discovery to startup. That's a lot of government, particularly in the Africas or the Latin American nations that have a lot of volatility like we've seen. So it's a different market. That's the whole point.
Yeah. But we wanted to play, so we're going to talk about a couple of deals. So let's do a few sort of brief mentions of where we would put different projects or deals that we've seen or we found interesting to discuss. So you had a couple that you wanted to talk about. So let's start with
Yeah,
one.
listen, I mean, yeah, a good example of how you can apply this Lassonde curve is Ecuador as a country, right? You've got
Mhm.
a lot of juniors that started off, some time ago, but when Andins Fruta del Norte actually started its development, and it was clear that the project was not only large but was going to go ahead and had a clear support from the government. When you put that together with the fact that Ecuador was very pro mining because they had no choice. Okay, the revenues from the oil business were coming down. It's not a big country. Mining was an opportunity. Some big projects around. There was a lot of interest in from the government side into promoting mining. So lo and behold, we've got the right situation, right? You're in the perfect storm, and a number of juniors come in, and those juniors have actually had very interesting discoveries that are today leading to some very large projects, right? I mean, you've got SolGold. I mean, you've got Lundin still looking around. Uh, you've got Dundee Group with a project there. I mean, you've got Codelco coming in from Chile taking a look, not very successfully, but still taking a look. And you've had some very interesting projects there. The real question is, how have the investors been able to follow that, and have they stuck around, right? A number of these projects in Ecuador have benefited that because of their size, they have gotten majors in as shareholders, right? And there's a couple of good examples where the BHPs of the world have gotten involved directly into projects, right? Adventus recently, I mean, Adventus's El Domo project is an advanced project by all states, by all concerned. It's got feasibility study already. It's very advanced in the permitting stage, financing pretty much in place, but ran into the same wall that every project had of the government of Ecuador, or the Ecuadorian mining projects alongside with other projects, um, hitting a wall on the administrative side, if you will, on the permitting side. And now that seems to be clearing up, they're joining forces with another big name in the market, right? Ross Beatty, with the vehicle Luminous. I mean, is that going to be a catalyst? Oh, sorry, a catalyst for this for that project? I mean, is that going to make it more attractive for investors because you've got a name that has obviously been successful in terms of creating value? And what's going to happen with some of the larger projects that potentially have because of the shareholding. Having a BHP as a shareholder, obviously, gives you a certain gravitas. But how is that going to translate until the project actually moving ahead? That's a question to have, right? Here in Peru last week, there was a project that I've always liked. It's called the San Luis project. It's an SSR mining portfolio. It got sold to a junior company called AbraSilver. And Highlander has two very interesting discovery projects. Not really early stage. I mean, there's some resource definition, some drilling needs more. They both need more drilling. And they got the backing of the Augusta Group and some of the Lundin family members in their shareholding in a recent raise. That gave them enough of a backing to go for this San Luis project and a larger transaction than the junior company with their profile would typically be able to take a bite out of, right? And that's interesting. I mean, if they hadn't done that acquisition, what would actually happen with the two projects that have a lot of prospectivity, but they're sitting in a company that is a junior company that has, in a very difficult capital market situation, very difficult equity market for juniors, for exploration juniors, right? They found the backing and they found a transaction that was more advanced. San Luis is a more advanced project. Okay, it's got a defined resource. I mean,
they are, so that's the orphan period. So a project like San Luis or the company that used to be holding that. Let's look at the project. So that project was held by Silver Standard for many years. Before that, it was I'm not going to remember. Anyway, this other silver company that was Esperanza, right? Esperanza. So that's the discovery has been made. That there's something meaningful there. As you said, you had backers. You're going through feasibility. You're working through the different steps that you need to to advance to potentially make this a mine. But you fall into that valley of death where you're not dying, but you're kind of in limbo because nothing new is coming. So you don't have the speculators coming. And there's a few other cases, like you have a company like AbraSilver, who they have this massive, great deposit. But I've done that project for so long, and it's there because it's already so big that the market doesn't really care that much that it gets bigger. So it will change. That will change. It's coming. But this that period where it's called the orphan for a reason. I think it's a very good characterization. It's not fun to be in that stage. It's definitely not fun.
But the orphan period. I mean,
so right now it's 220 million.
AbraSilver?
Yeah. I mean, it's still really is good, but they, for what they have, they should be bigger. But it's gonna come. It's coming.
Well, yeah, but I mean, you've got AbraSilver with 220 million, which is by no. Yeah, you could definitely argue that it should be higher, but it's not a bad market cap, right? I mean, I'm sure that you're going to make comparables, but I'm a director of a company, Atico Mining, that has a $20 million market cap, and it's actually producing copper, right? It's generating a lot of cash, and we have a project in Ecuador. I mean, there are these discrepancies in the market that are massive. You've got discovery companies that, because they are backed by a good group, have a much higher market cap than a producing company, right? And now you've got gold that just shot up in the last week above $2,000, and I mean, that's going to lead you to, gold companies raising money right, left, and center. And they started today. Argonaut Gold today announced an $80 million bought deal, right? And that's great. But I don't know. I mean, the market is very complicated, right? I mean,
Yeah,
I,
always is.
you've got a company called Silver Mountain here in Peru, and they have, I would say a brownfield project, polymetallic, good silver content, etc. Um, and their market cap is somewhere around $20 million. Okay, and they're, you could argue. I mean, they have the market cap of an orphan period. Okay, but they're not at the stage of an orphan period. They're well beyond the stage of an orphan period.
Yeah.
I would argue they're beyond the stage. They're towards the end of their feasibility. Okay, and they have the potential of being cash flowing in less than 18 months. But they have, a $20 million market cap. So those discrepancies are significant, and I think that's where the opportunity is right. That there are, I remember one of the best stories that I remember, and I'm fairly close to it, was Rio Alto, right? I mean, Rio Alto acquired the La Arena project from IM Gold, in for a fairly low price. Today we see that, but in a good structure, and started raising money. And I mean, that was a huge success, right? I mean, La Arena today is still producing gold, and this was maybe 15 years later. It's still producing gold, and has the La Arena two copper deposit below that, and it's in the hands of Pan American Silver. I mean, Rio Alto merged with Tahoe, and Pan American Silver bought Tahoe. But that was a huge success. And I mean, I remember the founder, and I remember their first raise of $7 million, and they basically did an RTO with a company that had some exploration assets in Mexico, and I think had $5 million in cash in their treasury, and some marginal exploration assets in Mexico, and they backed into that vehicle. But those $5 million were the start of a fantastic story. There are good opportunities, and you're seeing that arbitrage right now. And we've just mentioned a few names of things that we're sort of coming across, or that are, that we're just coming across. But if you actually sat down and systematically started looking at, the different opportunities, I'm sure that, you could find some very interesting opportunities for, not so big amount of cash.
Yeah, I think that's a key here. So if you can't use this, I think it's a very valuable tool. You can't use it as, it's not a gospel. It's supposed to give you a sort of an overview. And whenever you find those discrepancies, and there's a lot of especially with the lithium, we most of us call it a disconnect, right? And I think the importance here is also, if you're an investor, you take this, it helps you, time your investment horizon. It helps you visualize that. You combine that with understanding how the different stages work of the mining life cycle, and that gives you another layer. And if you come across a company that is, in that orphan period, that's kind of when you find good opportunities, because if you're gonna buy at the height of the discovery, you're gonna be probably paying too much. So you want to try and as much as you can, you want to try and find something, an opportunity like that. And the other deal that we did talk a bit about in another episode, I think it was about 2 or 3 episodes ago, it's a deal that didn't complete, but it fits in another stage of the process here. So I wanted to bring it up. It was the potential deal between Albemarle and Liontown. We talked a lot about that. It didn't work because Gina Reinhardt came in and she paid about $3 per share, and the stock is about, I think, 1.3 now, something like that. So she, or 1.5. So she paid a lot of money. But they're gonna be producing next year, so it's gonna be another story. But you can see that there's another cycle of hype that comes for them. Obviously, it was also the fact that they were being hunted by another player, but they fit into the development startup phase, and you can see that there's a straight line up in that state. So obviously you'll find, as the mine starts, it starts production, you're gonna see that they will remain and they will get higher. You can see that with Pilbara as well. I mean, aside from the super fluctuations of a volatile market, and lithium in particular, it's been super volatile for the last few years. But if you sort of flatten that into trying to finding trends, you can see that a company like that is going to go through phases, and the operating mine is kind of in a downward of the curve, because you are depleting your resources. But what this tool does not consider is that if you're getting cash out of it, you're getting cash flow, your overall return over there is not going to just be the stock price, obviously.
Yeah. No, no, no. Of course, of course. I mean, there's taking a look at that curve. I mean, I remember looking at that curve early on in my mining career, and it depicted fairly well the wave, right? And the stages and the trends. And I think that those trends have changed dramatically, and you do have arbitrages in what you have. They depend on the market, they depend on the stage, and they depend on the jurisdiction, and they depend on the move, right? I mean, with what just happened in Panama in the last week and a half, right? Uh, I mean, that's going to bring back a lot of questions around, you know, the whole nationalization thing and the whole political risk thing, particularly when the stakes are so high. Okay, and um, but more fundamentally, it's going to be like, wow, if a project that size is not going to come back into the market, how many projects that are in the pipeline that need to, you know, how many projects that are in the pipeline need to come on stream to compensate that out of the market, because that wasn't everyone's model as something that was producing for a very long time. So how's that going to make up going to come, and how many of those are going to be $10 billion projects, right? Or $2 or $3 billion projects, with all of the political risk and the timeline that we've been talking about, and how ready are the investors going to be to go in and wait it out, right? Um, it talks a lot about strategic partners, associating yourself with good names, um, and having broad shoulders to withstand um, longer periods of time, but also more volatility in terms of just whether it's capex escalation, um, labor issues, environmental concerns, and just general political risk. It's a tougher market. It's more challenging, but for those looking for the investment opportunity, I think there's plenty of investment opportunity. But also, I think that for those companies looking to enter into markets, into new jurisdictions, I think there's a lot of opportunity. You just start. You just need to be looking under the radar.
Oh, yeah, and I think that's a bit of we've been doing a lot of that, talking to corporates that are looking for off-market assets, and there's a lot of appetite for that, and that's good, because that's where they should be looking, in stuff that is not so visible, and it's always interesting to look into that kind of under the hood and see what else you can find. All right. I think we could just mention a few, maybe a few that are just starting out. So in the sort of the concept to pre-discovery phase, or starting the discovery, and then we can wrap it up. I wanted to mention there's a company called Sendero Resources. We've known most of the team for some time. They were clients earlier this year, and they have a really interesting deposit in La Rioja in Argentina, and they are in that phase. Anyone you want to mention?
Oh, I mean, we've got a couple of we've been looking at a couple of private companies that have things. I mean, one has copper in Bolivia, not jurisdictions for everyone, but some interesting potential things in for copper in Bolivia, some things in Peru as well. That I think sooner rather than later are going to be looking for homes in the public market. I mean, it's it's tough to convince someone right now to go into the public market, because there is no money, and it's tough out there, right? So I mean, why would you actually go into the public market unless you're the group that you're talking to is really backed by long-term money and real desire to create value rather than promote for the short term.
Yep. No, absolutely. It's not. I was talking to a private group here at IMAC, and I was said, "Oh, I hope you guys are not considering an IPO just yet." And they said, "No, we're fine. We're gonna wait it out a little bit longer." So yeah, so I agree with that. All right, I think we're done for today. We've had a nice different take on a very well-known tool, but with some insights. So that's it. Take us out, Luching.
Yeah, I mean, I think it's been a good discussion. I think for the next one, Paola, we'd really like to have a guest, and we'd love to hear from whoever's listened to this to the very end, what you guys would like to talk about. And I mean, is it talking a bit more about the junior sector and what's out there for them, or is it let's have a bit of a broader discussion on copper and what's next for copper or lithium, or what would you like us to talk about, and we'll have a think over the next week or so, and hopefully get a speaker that we can do have a bit more of a discussion.
Yes, sounds good. Let us know, and we'll find the right guest. All right.
Yeah.
Well, see you.
Thanks,
see you
Paola.
soon. Bye.
Bye.
Lucho and I will be back in 2 weeks. Until then, here's another related episode you may like to watch next. Bye!